Good evening. My name is Rudi, and tonight we're going to go through the conversions and diversions on the RSI and stochastic. All right. So conversions and diversions has an easy explanation as well. It's basically a bullish or a bearish trend or upwards and downward trend, but on the stochastic and RSI, and that makes it much easier than reading crossovers and stuff like that to see when the share is in a buy or a sell trend. So the easiest way to basically see when the share is going to go up is using a conversions or a divergence trend on the RSI or the stochastic. So the last webinar I did on the 8th of the 10th, I did a webinar on SSW, on Sibanye-Stillwater, and Sibanye-Stillwater has been growing ever since. Now that's this red line that I've drawn over here. Now, since the 8th of the 10th, the share has grown from around about 46 Rand and 1 cent all the way up until 62 Rand and 15 cents. That's only by using a convergence and a divergence line, which is this green line on the RSI and the stochastic, and also this orange line that I've plotted on here. Now, our orange line is what we call a converting line, and the green line is what we call a diverting line. So upwards trend and a downward trend, bullish or bearish. Okay. So how it basically works is we always teach you that you look for the crossover points on your stochastic. Now you'll see I've got an extra red line on the RSI. I'll show you guys a bit later how to plot this extra red line on the RSI, because it also works in the same manner as the red line on your stochastic. Now we usually teach you that when the red line crosses the black line in a bullish trend, then that is seen as a buy indication, or when the red line crosses the black line in a downward direction, that is seen as a sell indication, which is true, yes. But the thing is, if you don't read your historical data on the RSI and the stochastic and see where your converging and diverging trends are, that buy or sell indication won't mean anything. Just a quick question. Can everyone hear me clearly? Okay, all right. If there is some sound issues that might be on the user side, so please just check on your side that your headphones or your speakers or whatever you're using is connected properly. But if there is any issues, I mean, you can always go and watch the webinar afterwards. Okay. So as I was saying, that crossover points means one thing, yes. All right. So it is correct in looking at the crossover points that it means a buy or a sell indication, depending on what direction the share is going. But the converging and diverging trends helps you a lot by giving you true buy indications or true sell indications. So what do I mean by that? So if we look at the buy indication on the 25th of the 9th, okay, we'll see that was more likely the correct time to buy. Okay, we can all see that, yes, the share did go up from there, okay, but there was a better time of buying it, and that was on the 8th. All right, so even on the 7th, that would have been a good time to buy. Reason I'm saying that is because if we look at the 25th of the 8th crossover on the RSI, and also on the 27th of the 8th on the stochastic, we'll see that we had a diverging trend. So what do I mean by that? That's basically when your previous point, okay, your previous lowest point is higher than what your current point is. So we can see that this point over here is higher than what the current point over there was. All right, so that's a diverging trend, indicating that the share is going to go down. Now you can read that from the top point as well. So if we look at, for instance, like over here, you will see that we had a high point over here, okay, which indicated a selling indication. But then the next ones over here was lower than what this one is, which was also indicating a diverging trend. So it means that share basically told you that it is gonna go down. Okay, so it already gave you a forecast of what's gonna happen, and that's exactly what happened over here. That was your selling point, and that your stochastic also said yes, that is the correct selling point. So this selling point over here, that would have been a false sell indication, because you still had a converting trend over there instead of a diverging trend. So you still had a higher high. All right, so this point was lower than what this one was. So that's what we call a converging trend. A diverging trend is when this point is higher than what the current ones are. So that's a diverging trend warning you that the share price is going to drop. Okay. Now, the reason I would not have bought here is because we had a diverging trend. Same in your stochastic, exact same thing. We had a diverging trend over here. All right, over here we had a converging trend. And over here we had a converging trend. Okay, but the thing with the RSI is I would say is the better indicator to use because it gives you the relative strength of the share. So the strength is more important than what the stochastic oscillator is. All right, but the stochastic oscillator is more like a confirmation on what your RSI says. So I tend to use the RSI more than what I tend to use the stochastic on your buying and selling indication in a convergence or a divergence. So when RSI has a trend like this, I will be more likely to believe the RSI than the stochastic. Stochastic would only be a confirmation on the sell indication that the RSI gave me over here. All right, so I had a forecast on telling me that the share is going to go down. Right. So as I said, this point I would not have used as the buying indication. All right. So we already confirmed that this was our selling indication. So where would our new buy indication be? That would have been on the 7th. The reason why is because of, as I said in the beginning, that we've got these indications over here, right? So we've got the orange line over here, and we've got another orange line over here. Okay, so these are our converting lines. The orange one over here and the orange one over there would be our converting lines. So this was the first buying indication. That would have been our second buying indication, confirming that yes, this share is going to go into a bullish trend. Okay, but not only did we have one over here, we had another converting trend over there, and we had another converting trend over there. Okay, and you can see that it went for a really long time. It stayed on that convergence and it's still on that converting trend. Okay, so it's still in a bullish trend. It's still going, all right, because the RSI is still in a convergence. If we look at the stochastic, we had the same thing over here up until there. We had a convergence. From there up until there, we still had a convergence. Okay, so we had converting trends telling us that the share is converting into a bullish trend. Now you'll see that here and there we did have some divergence. All right, so we had a diverging trend over here, warning us basically. Over here we had a selling indication. Okay, and over here we also had a selling indication, basically confirming a sell. So for a short-term trader, that would have been basically a good trade, right? So you put in your buy over here, and you basically would have sold over here or over here. Okay, because a trader would buy low, sell high. All right, so immediately the moment it reaches a high, then you'd sell out. Okay, but you're going to still use the same principles, looking at the previous indications that your stochastic and your RSI gave you. Okay, if it wasn't a converting or a diverting trend. Now, currently, what we have over here is still a converting trend. Okay, and over here we also still have a semi-converting trend. The stochastic still needs to decide what it's going to do. Okay, but there's another way of reading the RSI and the stochastic with that convergence and divergence. You would basically be able to foresee what's going to happen even before it makes that diverging trend. So what do I mean by that? If we look at the orange line on the RSI, we'd see that it went up, all right, up until a point, and then over here it broke through that convergence, all right? So the moment it breaks through that convergence, you'd already see that there will be a selling indication in the near future. Okay, and that's exactly what happened. We had another selling indication of year. The share basically dropped, right? And that's where the share price started to go down. So it's like, for instance, when you work with the support and resistance line. So a support line would basically look something like that. So that's a support line where the share just continues trading on top of that line. Okay, so it will also have a resistance, which would usually be one at the top somewhere. Okay, so that would, for instance, be like a resistance line. So over here we also had some resistance over there. All right, so the parallel to they would usually be parallel to the support line. Okay, so sometimes what would happen is if the share breaks through that support line, like over here we had one there, okay, more or less, and it went up, it resisted against the line, and then it broke through the support. Okay, so that was the support for this trend that I have out over here. So it broke through, and that can happen with your RSI and Stochastic as well. So like for instance over here, you'd see that it went down, it broke through, basically ending the that diverging, more or less a diverging trend. It went up again, crossed through, all right, making a new conversions. Okay, so that can happen as well, where your converting or your diverging line can also act as a line where when it breaks through, then you know, okay, yes, it might make a new bullish trend or a new bearish trend. Okay, but that's a little bit more advanced. So the easiest way that I can explain it to you is using your using that method of looking at your first buying indication. All right, don't buy yet because of the previous one being too high. All right, and then wait for the second one to confirm that that would be a buy. Okay, we had the same thing on Stochastic. We had a diverging trend. Okay, and then we had a buying indication here, but I would not have bought there. I would have waited for the second one. Sometimes it can be a bit tricky, depending on how big the gap is. If the gap starts to get too big, then you have to go on and using other stuff, like for instance a 5-day moving average or a 10-day moving average or a 20-day moving average, and using those crossovers to confirm what your conversions and your divergence are saying. Okay, so currently what we have is we've still got a converging trend on SSW on Sabanya, and over here we also still have a converting trend. Okay, so it's still converting. It did not break through yet. Same on your RSI. Okay, you still have that conversions. So if it breaks through this, it will end the bullish trend. It will end this bullish trend. Okay, and it will drop a bit. Okay, and the thing is, which is also making it more obvious that it might drop, is because we've already got these lower lows or lower highs. All right, so the lower highs basically is telling us that it might divert. Okay, but the conversions is much stronger than what the divergence is currently. So it might still go up, it might still go down. All right, but currently it's going sideways. So we can see that on the Stochastic as well, that we've got a little bit of a sideways motion over here, and that's what's causing the RSI to linger in the middle. All right, is because of your Stochastic pushing sideways. Okay, so let's take another share, for instance, like Kumba Iron Ore, KIO, and we can take a fresh share. So we can see that Kumba has been growing more or less in the same time period from the 8th of the 10th when I did the webinar on SSW. So we can plot that point as well. Okay, and we had the exact same thing. We had a converging trend over there, and we had a converging trend over there. Okay, so we had conversions. So we had the first buying indication over here, which was the diverting one. Okay, so it diverted. That would not have been our true buying indication. We had the same thing over here, right? It's a diverging trend. So we also had a buying indication over there. So what I would have done is I would have waited for the second buying indication over here before buying. Okay, and we still, even though the share price dropped, okay, so if I remove all these lines, even though the share price dropped over here, we still had a converting trend on our Stochastic and an overall converting trend on the RSI. Okay, still making that a stronger indication than what our diverging trend over here was. But if you wanted to be careful and not buy there again, all right, if you were a trader, for instance, buying here, selling there, then I would have said, wait, instead of buying on that point over here, wait for the second buy indication, which would have been over here, giving you that true buying indication that it's a converting trend. And from there, we could have seen that it was converting. Okay, and over here we also had a buying indication which told that the share was converting. Okay, so that's more if you want to wait for a longer term, okay, to make sure that you've got a good long-term investment. A mid-term investment would be more like SSW, which has got a much more up and down movement than what Kumba has. Kumba has got a slow movement, an upward trend, and a slow movement in a downward trend, and then also slow movement in an upward trend again, where SSW has got a more rapid up and down movement. So it would be easier to catch those converting and diverging trends. Okay, so instead of just using the RSI and stochastic convergence divergence, you'll be looking at more moving averages. Okay, so I'm going to spend some time in answering some of your questions. So if you've got any questions, you can ask them. Then I'll quickly be able to answer them for you. If there's anything that you don't understand, then I can just explain it to you again. So you're free to ask some questions. And as I said, this video will be available for you to go and watch again if you want to make 100% sure of the convergence and the divergence. Okay, so let's go on the first one, right? So please check ANGE on this method. So let's go through Anglo quick, all right? So let's go to ANGE Anglo, right? So we've got Anglo currently. So Anglo currently has got a good converting trend. So it's got a bullish trend on its main chart. Okay. So if we take our line once again, we can see that over here we had a buying indication and over here we had a buying indication, right? But it was pretty much straight. Okay. So we had a more or less a horizontal pattern over here. Okay. So on the horizontal, I won't even bother on buying, okay, on the bottom, but we can see that we had lower highs, which was still that diverging trend. Okay, so it still went into a divergence. But there's an interesting thing that I'll show you now that I've explained earlier of the breakthrough on your divergence. Okay, so here, yes, we did have a little bit of a convergence. Okay, so over here would more or less be the time period that you would have looked at the buying indication, but I would have waited. Okay, reason that I would have waited is because we still had this big divergence over here, another divergence over there. Okay, so we had breakthroughs basically on the correct time period, meaning that over here we had a breakthrough through that divergence. So we had a divergence over here and we had a breakthrough over here through that divergence, ending the divergence and creating a new converting line. Okay, so it converted. Okay, and in more or less in the same time frame over here, we also had a buying indication, which was on a converting trend. So that's a steep convergence. Okay, but in the same time, we had another convergence over there, just confirming that steepness. That this period over here would have been the better place to basically go and buy. Okay, so sometimes you'll have when your convergence and diverging lines cross, like over there. So you've got this is your diverging trend, converging trend. So the crossover between the two, that would have been also seen as the buying indication. Okay. Sorry, there's a lot of lines in here now. Let me just remove all of them. So this would have been the more likely the buying indication. All right, because we had a converging trend over here and we had a good converting trend over here. The current one that we've got is we've got lower lows. All right, so this one's got lower lows, but it's basically opening on a funnel. Right, so it's continuing in this funnel. So I would say that it might look like the share wants to divert again. And currently it looks like it wants to do that because it's breaking through on this trend over here. So it's definitely still going to go down. Another thing that's also indicating that the share might still go down is that if we look at the 50-day moving average that I pulled in here, that yes, we had more or less a buying indication breaking through there, but what it's doing now currently, it's going down. It's breaking through the 50-day moving average. So that would also indicate that it's ending that converting trend. It's just going to go into a diverging trend again. So using technical analysis in this type of matter, I would say that ANGE might definitely still go down. So the next question basically you want to know how to put the RSI, the red line on the RSI. So how to do that? So I'm just quickly going to remove it. I'm just going to delete it. So if you want that extra red line on the RSI, so what you do is top right hand corner, you've got your studies, right? So you'll need to use a moving average. Okay, so you go to moving average and change your period to the same time period than what your RSI is. So the time period on the RSI is currently 3. So we change it to 3. Then we choose the field, which is our RSI. So we choose the RSI field. And then the type would be exponential instead of a simple moving average, right? So a simple moving average would be a more, like for instance, like your 200-day moving average and your 50-day moving average would be more smoother. So exponential one would be a little bit more rough. So when we create that on top of our RSI, it will plot it for us. Okay, so that gives you that buying indications closer. Instead of just looking, because usually what we told you is look at when your black line crosses through the 20% line, then that would be a buy indication, which is right. But the thing is, you can see your buying indications much easier by using a 3-day moving average on the RSI, but it needs to be a exponential moving average, which would give you much clearer buying indications. Okay. So on SSW, where do you see the sell indicator? So the sell indicator really doesn't, I would say that it hasn't really happened yet. So if we look at the SSW, all right, now we can still see if we quickly remove all these extra lines that I've pulled in earlier. So we can see that, yes, we have that diverging trend over here, okay, but we've still got a strong converting trend. All right, so it's still in a strong converting trend there, and we've still got a strong converting trend over here. So it's still converting, it's still going up. And you've got a really strong conversions over there. Unless it breaks through here, when it breaks through there, then it's going to be a definite sell. So then I would rather get out, all right, because that means it's ending the conversion. So it's ending that upwards momentum. Okay, so I would say if we go a little bit back in time, then it's much easier to show you. So over here we had a selling indication. Let me just take a horizontal line, so it's much easier to, or sorry, vertical line. So over there we had a selling indication. Over here we had a selling indication. Over there, and over there, and over there, we had selling indication. So one after the other, it continued to tell us, listen, yes, sell all the way. Okay, so that is a diverging trend. Okay, so there's a diverging trend. Over here we also had a diverging trend. Okay, and then at the bottoms we had lower lows as well. So that's all of them going down. So all the lower points are basically also going down. So also indicating or forecasting that in the near future the share is going to go down. That's exactly what happened over here. At the last point, it gave you a selling indication. And same thing over here, you had lower lows. All right, continuing with lower lows. Over there also same thing, lower lows. And yeah, lower lows. Okay, so up until that point over there, you would not have thought of buying any shares on SSW. Okay, because you had this long diverging trend. Same thing over here. You had diverging trends. It continued to give you divergences. Okay, so these would have been selling points all the way. This I would have seen as a false selling indication because we still had a converting trend over here. Okay, still had a convergence over here. Right, so that would have been my false sell indication. Would have been this one. Okay, so either between this one over here and this one over here, I would have sold the share. Okay, if that answers your question a little bit better on when to sell the share, would be with your points being lower and lower and lower. So both the conversions and diversions going down at the same time. That would indicate that something's going to happen. So you can basically forecast or foresee the sell when the share is going to start dropping. All right, and it dropped for a while. I mean, we could see that we had a diverging trend over here, so a bearish trend, and over here we also had a bearish trend. So it continued there. So with the support and the resistance, it still basically went sideways. Okay, so same principle. I would still say that the 8th, more or less the 8th over here or the 7th, that would have been a good time to buy because that's when it started to clear out on that diverging trend. Okay, so it started to go up there. because of the converting RSI. So basically all the way from over here up until over here, I would not have bought at all. So that's within time period from the 28th of the 7th up until the 11th of the 9th. I would not have thought of buying at all because you had a diverging trend. Okay, so if that answers your question on the on when to sell, basically. So next question. All right. So thank you for giving more in-depth understanding. It's a pleasure. This is basically the easiest way of telling you where to find your easier buying indications instead of just looking at crossovers, because crossovers mean one thing. Yes, it's a good thing to look at them, but if you don't understand a converting and diverging trend, it won't help you as well. So Anglo is AGL, sorry, so AGL, sorry, so I got the wrong one, so AGL. Okay, so let's quickly look at AGL then. So AGL, yeah, so the current one is giving us a good buying indication. So it's not giving you a converging trend. So once again, same thing. You had that buying indication into a divergence. Okay, so into a divergence, you had a buying indication. So I would not have bought there. Same thing over here. It looked like it wants to cross through, but it didn't. Okay, because of that divergence, of course. And then over here, all of a sudden, we had the buying indication. So as I said previously, that the stochastic can basically give you bigger gaps than what the RSI would, all right? Because your RSI would be more rapid than what your stochastic would be. But still, we had this big one over here. So this would have indicated the long term, all right? So basically this this midterm that we had over here, that it was still going up. So up until here I also would have bought, because why? That was the next buying indication, causing the converting trend in both directions, with your higher highs and lower low, or your higher highs and lower highs. Okay, so as I said, your RSI, once again, it's a stronger indicator than what your stochastic is. Stochastic would be the go-to one instead of the stochastic. Okay, so I'd much rather use the RSI than what I use as stochastic. Stochastic is plainly basically like a confirmation of what your RSI says. Okay, but I prefer using both instead of just the one, because using one indicates and you've got no other confirmations with converting or diverging trends, because sometimes what can happen is your RSI can go down where your stochastic goes up, and that will cause a sideways trend. Okay, so if one goes down and one goes up, it would give you a sideways trend, which was what happened over here. So from there up until here, you had a sideways trend. Okay, why? Because this one was going down, your RSI was going down, and stochastic was going up. So you can also basically see when the share is going to continue in that sideways trend. Okay, so that can also happen. All right, so another question hier. As mens wel ANGE is dit 'n feit om te verkoop? So the thing is, I won't be able to really tell you yes or no on that question. But if I look at ANGE, then I would say I would not be in the share currently because of this trend over here, unless it bounces. So if it bounces over here, okay, so I would say that no, it didn't bounce. All right, it already had a breakthrough. So we had a converting trend over here. It ended on that converting trend. It's now in a divergence. So I would say that unless the share doesn't turn rapidly all of a sudden, I would not stay in the share. We had a converting trend over here, a converting trend over there, you had a breakthrough here, and another breakthrough here, confirming this new diverging trend. So I would not stay in this one. But that's only me. I won't stay in this because of that overall. And another thing is because of this overall bearish trend. So overall bearish trend in both directions. I mean, on the supports and the resistance, it keeps on staying in between. So I would not be in the share. So what it's currently doing is resisting on the resistance line. So between that point and that point and these points over here, I would say I would not stay in this, because if I were to really want to buy on the share, I needed to break through. It needs to break through the resistance. Okay, so it's resisting currently. I would not buy the share right now. And if I had the share, I would still have the option to sell it. So I would choose to rather sell it because it's breaking through on my converting trend. So that breakthrough over here tells me that it's going into a divergence currently. So I would not stay in it. So PRX, if we can quickly do PRX. So PRX. So process has a current strong converting trend over there in both directions. So it's got a converting trend in both directions. Yes, we had this divergence over here. We had divergence over here. So it's currently, and if we look at the overall picture, then we'll see that the share is in a sideways trend. I mean, if we look at from there up until there, that's the overall trend is sideways. I mean, if you look from over here till up until now, I mean, that's a sideways trend that it's giving us. So for a trader, right, instead of an investor, that this would have been like quick buy, quick sell. So if we had to decide on, for instance, like a buying indication over here, then I would have used the RSI for a converting trend. So all of these points basically together giving us that converting trend for a quick buy. Okay, so buying over there and then quickly selling over there once it hits its high. And basically that would have been our selling points over here. Okay, because we had a diverging trend over here. Overall, it still had a diverging trend from there to there and from there to there. So it still had a diverging trend. But currently, I mean, it's in a sideways trend. So I would say that it's already too late to buy the share. All right, because if you look at this point over here, and this point over here, yes, it's higher lows basically. So it's all got that converting trend. Over here, it's also got a converting trend. Over there, it had a strong converting trend. Okay, so I would say it's a bit late maybe because it's already too high to buy. It's already close to the 80. Same thing over here. You can see that your stochastic wants to cross. Okay, yes, we still got that converting trend, but not now, I would say, because this one wants to say sell, that one wants to say buy. So what's going to happen is it's going to push it sideways. Okay, because when one says buy, one says sell, one contradicts the other, then that would basically be a sideways indication, indicating that the share might go sideways. And then the last question I've got here is MSM. So MSM. So MSM is currently, okay, so what we've got here, we had a divergence. Okay, let me just try to plot this better. We had a divergence, so it's breaking through currently. So it's giving you a current breakthrough point. Okay, and we had a converting trend over here, a diverging trend over here, basically just opening that gap. And we've still got that diverging trend. So this is one of those that I would say don't be too hasty. Wait for the conversions on the stochastic. Yes, it's already low, right? Which is a good thing. It's already low. We've already got the conversions on the RSI. But what you want is you want that second indication, right? So the second indication would give you that yes or no. So I would say that MSM would give us that second indication once it breaks through on my 50-day, for instance. So once it breaks through on my 50-day indication over here, then I would say yes, it will give you a new bullish trend. So currently, yes, we've already got the conversions over here. It's already starting to convert over there, which are really tight conversions. But we've still got this divergence that we had over here, but at least it broke through. So the crossover point where these two met, so from that point up until that point and that point to there, where they crossed, where they met, that's basically, I would say, where it ended that diverging trend. All right, so that might indicate that the share is going to continue going up. But remember, RSI can be more rapid than the stochastic. Okay, so you need to look out for that. So once that happens, then I would say rather wait a bit and see if it's going to cause a converting trend. So because of the stochastic not confirming anything, it's just giving you, it's still giving you that diverging trend. I would say wait a bit, don't buy immediately. Just wait for it a little bit so that it can start converting. Okay, so as I said, convergence and divergence is a really important thing because you can basically have really stronger indications with that. So if we look at back over here, Same thing, we had a buying indication of year, buying indication of year, so that gave us a converging trend, and we had a confirmation on that converging trend on the stochastic. And same thing, if you look at the longer the overall picture told you that that's still a convergence. All right, it's not diverting, it's converting. Okay, so that would have made your buying decision runabout in this time period would have made it much easier. Okay, so sometimes when, as I said earlier, your gaps on your stochastic would sometimes be bigger, but even though if it's a bit bigger, it still can mean that when this one's lower than what this current one is over here, and your RSI, as I said, RSI is a strong indicator. With the RSI, I would say yes, that would have been a good buy indication. Then another thing I want you guys to keep in mind is that sometimes, even though you've got your selling indications being rapid one after the other, you need to be careful of that as well, not to get out of a shit. For instance, if you're in a long-term investment, to put up your stop losses and stuff like that for your SMS notifications, like things like 8% or a 10%, especially for an investor. If you look at SSW, same thing with MSM now. If you look at Kumba Iron Ore, shares like that, then rapid upwards directions. So even though you've got one sell indication after the other sell indication, so you've got a higher sell indication, just an example, you've got a high sell indication, you've got a lower selling indication indicating that, listen, you need to go and sell because it's diverting. I would say just keep in mind that you still got the SMS notification that can warn you when it reaches, let's say, 8% or 10%. So you don't get out too quick, because sometimes what would happen is, let's say this was like a 10 or 7% drop, just for as an example. So if this was like a 7% drop and it turned around before it even reached your 10% or 8% mark, okay, so that you don't get out too early. Because what will happen is you'll see that even though it dropped over here, let's say you bought in this time frame and the share went up, you had a trailing stop loss following the share all the way up until there, it fell by 7% instead of 8 or 10, and then all of a sudden it starts to turn around again. But I doubt this is like 7%. I think that there's a little bit more, so you would have like had a little bit of a fright and rather sold out. But the thing is, you could have bought directly after that again. Okay, so over here I would have said yes, sell over there because of that. But just keep in mind that your SMS notifications you still need to focus on, and follow them, because sometimes you would read one thing on the charts and be a little bit afraid, and trade with emotion instead of looking at the overall picture. So yes, RSI and stochastic is a good thing, but don't forget to use moving averages. Don't forget to use your trend lines, and seeing what trend the share is. What's the overall trend on the share? Is it continuing in that bullish or bearish trend? Because that's also important. So don't only focus on the convergence and divergence that I've taught you tonight and showed you. Focus on other things as well. With the RSI and the stochastic, using convergence and divergence, a really strong indication, really good thing to use. I mean, it's worked for plenty of our clients, and they're making money with that method. But still keep in mind that other aspects can also play a big role. Like for instance, if you look at your fundamental analysis, anything that happens out there, anything that happens in your daily news or in politics and stuff like that, it can still have an influence. So stuff like that you still need to keep in consideration. But other than that, RSI and stochastic conversion divergence really strong indicator. So yeah, that's the conversions and diversions. That's the easiest way I can explain it to you. There's plenty of other material out there that you can go and search up for. You don't only need to use my advice for it. You can go and search it up on the internet as well. Any other videos and stuff that you can find, use them. I mean, because conversions and divergences work, and that's how I've been investing. That's how I've been trading, and it's been working for me ever since. So I mean, proof is in the pudding. If we look at SSW, since the 8th, when I did the first webinar, it's grown ever since, and it worked. Okay, so yeah, so I hope you guys have a wonderful evening, and I hope to see you guys in next week's webinar, and then we'll discuss something else. But if you've got anything else that you would like to see on a webinar or anything, email me on rudy@sharetracker.com or support@sharetracker.com. Send us a query for anything that you would like to see on a webinar, and we'll consider it and we'll show you guys. So yeah, have a wonderful evening further, and then we'll speak next week.